Hello and welcome to My Finance Teacher. Today is 11th of April 2018 and I hope everybody's having a nice day. And today we have breaking news. Dollar is feeling sick. And what does it mean for you as an investor or as a trader in precious metals? So let's have a look at the dollar here. We have seen this intermediate cycle in dollar and with a new intermediate cycle, with a new rally, if everything is fine with the dollar, basically at the beginning of the cycle, often there is a relatively strong rally. However, we only saw dollar reach this resistance level at around 90 and a half. And since then, it has been stuck in a trading range. And over the last several days, it's feeling sick and it's closing down for a couple of days already below its 20-day moving average. So that doesn't look well for dollar. Well, one thing that might be going on is, let's have a look at daily cycles. We've had one daily cycle here, which lasted for about a month and a half. So that's a good enough duration for a daily cycle. So we might assume that we've just started a new daily cycle near the end of March, around 27th of March. And after just a week or so of upward movement, the daily cycle is already breaking down, and there is a chance that over the next several days we will break down below the recent low that we saw in the end of March. So we might see a daily cycle behaving something like that, starting around here, and if it lasts for another month and a half, that will give us all of April, and right, actually that gives us somewhere in the middle of May, which is, as you know, the time for the next FOMC meeting where the rates are expected to be hiked a little bit. So that might help dollar to strengthen around that time, bounce up for a while. And there is a chance though that it's going to continue falling down after a short period of strengthening. Let's zoom out on the chart and have a look at the weekly chart. It might help us find the next sort of support zone that the dollar is trying to reach for. That peak might prove to be sort of a support zone, although it happened a very long time ago. That is a level of 86.7 or so. What might happen is over the next month or so, within this second daily cycle, dollar might actually reach this support zone. If that happens sometime by mid of May, that will be just in time for a bounce in the dollar with the expected rate hike. Next, let's have a look at a channel that the dollar has been in for a while. Well, what do we see here? Again, dollar has only had strength enough to reach this resistance level, both formed by this recent low and the upper range of this downward channel. And there is a good chance it's going to break down over the month, giving us some sort of mid-term cycle low, a little bit of a bounce with the expected rate hike, and a continuation of that half a year cycle, which will give us a further breakdown in the dollar over the next several months. One other possible support zone is around here, around those lows. So what might happen to the US dollar is it might actually move close to 85 or just under on the dollar index. Of course, it's hard to say what's going to happen in the dollar past the FOMC meeting, but what it seems to be doing now is it seems to be feeling sick, and probably over the next couple of weeks at least, we might see a downward movement in the US dollar. What it means for precious metals is we might see a nice little bounce in gold, which has already been underway for a couple of days actually. So the way it might turn out is that gold might soon break just above the recent high that we saw in the end of January, break just above that over the next, well, let's say a couple of weeks. That will give us a lot of excitement from the speculators, that will give us excessive optimism on the market, and that's usually when the market stops. So actually at that time we might see gold finally breaking down into, say, its intermediate cycle low. Actually, again, coinciding with this expectation of a Fed rate hike sometime in the middle of May. If you want to take advantage of this trade, I think it is pretty risky because there might not be a lot of potential on an upside on gold or gold miners. Personally, I have entered some positions today just at about 22.75 or so. Relatively late. I should have entered some positions yesterday, of course. In hindsight, the vision is 2020. But there is a potential for miners to climb to 24 or so before they turn down into the middle of May. This is GDX, by the way, and the potential is there, but why this trade is risky is because gold is already so late in its intermediate cycle, and we are sort of in the time band for a declining phase of this cycle. Remember, this is not an investment advice. Be careful, be prudent, and make your own conclusions. I'm sharing with you my opinion on what's going on with gold and what might happen as a result, or as a consequence of that with the precious metals. Thanks for your attention.